A trade pact is an agreement that sets the rules for trade between countries, shaping how goods, services, and investments flow across borders. These agreements are not just about economics, they also reflect political relationships and strategic interests. When two nations come together to negotiate, they are essentially deciding how they will interact on the world stage and what kind of future they want to build together. Trade pacts cover a wide range of issues, including tariffs, intellectual property rights, technology transfer, and labor standards. They can determine how much tax is paid on imported goods, how companies protect their inventions, and even how workers are treated in factories. These details may seem technical, but they have a direct impact on everyday life, from the price of electronics to the availability of jobs. When the United States and China, two economic giants, negotiate, the global impact is enormous. Together, these countries account for more than a third of the world's economic output. Their relationship influences not only their own citizens, but also businesses, workers, and consumers around the globe. Their decisions ripple through markets, affecting everything from commodity prices to supply chains. A single policy change can cause stock markets to surge or tumble, and can alter the cost and availability of products worldwide. Companies must constantly adapt to new rules, while governments monitor the effects on their economies. Recent years have seen rising tensions, with tariffs and trade barriers disrupting industries worldwide. These disputes have led to uncertainty for businesses, higher costs for consumers, and shifts in global manufacturing. Some companies have moved production to other countries, while others have struggled to survive. The latest US-China trade pact aims to ease some of these strains and restore stability. By addressing key issues and setting new terms, the agreement hopes to create a more predictable environment for trade and investment, benefiting both nations and the world economy. But is this agreement a real breakthrough or just a pause in ongoing disputes? Many experts remain cautious, noting that deep-rooted differences still exist. The future of US-China trade relations will depend on how both sides honor their commitments and address unresolved challenges. The world is watching closely, knowing the outcome will shape global trade for years to come. As negotiations continue, every decision made by these two powers will have lasting consequences, influencing economies, industries, and lives across the planet. In June 2025, the United States and China unveiled a landmark trade agreement that could reshape the global economic landscape. At the heart of this deal are two critical issues: rare earth minerals and the easing of tariffs that have long strained relations between the world's two largest economies. The announcement, made after months of tense negotiations, signals a cautious but significant step toward cooperation in an era marked by rivalry and uncertainty. China, which currently controls a staggering 90% of the world's rare earth supply, has agreed to not only resume but also accelerate exports of these vital minerals to the United States. This move is a major victory for American technology and manufacturing sectors, which rely heavily on rare earths for everything from smartphones and electric vehicles to advanced defense systems. In return, the United States will lift a series of tariffs on Chinese goods, a gesture aimed at reducing costs for American consumers and businesses, while also attempting to reset the often contentious trade relationship. The hope is that this mutual easing of restrictions will foster a more stable and predictable environment for global commerce. To address China's long-standing security concerns, the agreement introduces a new licensing regime. This system is designed to ensure that rare earth exports to the US are strictly monitored and not diverted for military applications, a key point of contention in previous talks. While this adds a layer of bureaucracy and paperwork for companies on both sides, negotiators argue it's a necessary compromise to build trust and transparency between the two nations. The process may be cumbersome, but it's seen as a vital safeguard. Economists and business leaders are cautiously optimistic, noting that while the deal is a strategic exchange of concessions, it only begins to address the deeper, more complex economic tensions that have built up over years of competition and mistrust. Ultimately, this agreement represents a first step, a symbolic gesture toward cooperation. But with so many unresolved issues still on the table, it's clear that the path to a truly balanced and lasting economic partnership remains long and uncertain. Despite progress, the trade pact leaves technology and aerospace disputes unresolved. U.S. restrictions on semiconductors and aerospace parts remain, citing national security risks. These sectors are flashpoints, fueling rivalry and impacting global supply chains. China's push to build its own aerospace industry faces hurdles due to export bans. The competition for tech dominance continues, with both sides holding firm. Future negotiations will likely focus on these high-stakes industries. The July 9th tariff deadline is fast approaching, injecting a sense of urgency and tension into global trade negotiations. Around the world, policymakers, business leaders, and diplomats are racing against the clock, aware that the decisions made in the coming days could have far-reaching consequences for international commerce and economic stability. The United States faces a critical challenge. It must finalize trade agreements with 10 key partners before the new tariffs take effect. This looming deadline is putting immense pressure on countries like India and Japan, who are weighing their options carefully as they negotiate terms that could impact their economies for years to come. Both India and Japan remain cautious, wary of entering into last-minute deals that might not serve their long-term interests. They fear that agreeing too quickly could leave their industries vulnerable to future tariff hikes, supply chain disruptions, and unpredictable market shifts. Meanwhile, South Africa is also feeling the pressure. Its citrus exporters, who rely heavily on access to global markets, are anxious about the possibility of being caught in the crossfire of escalating trade tensions. For them, the uncertainty surrounding the deadline threatens jobs, livelihoods, and the future of their industry. Smaller economies across the globe are watching these developments closely. Their fragmented and often limited responses highlight just how challenging it is for emerging markets to navigate the complexities of great power competition and shifting trade alliances. The outcome of these high-stakes talks will not only determine tariff rates, but also set the tone for the next phase of global commerce, influencing supply chains, investment flows, and economic growth worldwide. While the US-China pact often grabs headlines, it is just one piece of a much larger and more complex puzzle. The decisions made now will ripple across continents, shaping the future of international trade for years to come. News of the US-China deal sent financial markets higher, with the S&P 500 nearing record levels. Asian and European markets also rallied, hoping for reduced trade tensions. Yet uncertainty lingers. US Treasury yields rose, but the dollar remained volatile amid inflation concerns. Oil prices are unstable, with traders eyeing the upcoming OPEC+ meeting and the Iran nuclear standoff. These factors complicate the economic outlook, even as trade optimism grows. The agreement is a boost, but markets remain sensitive to global risks. Investors are watching for the next move. The US-China trade deal is just one part of a shifting geopolitical landscape. Tensions with countries like Iran add to global uncertainty, as recent US strikes highlight ongoing risks. African nations, including South Africa, must navigate these dynamics while seeking economic growth. Exporters face new vulnerabilities, underscoring the need for strategic partnerships and diversification. Meanwhile, inflation data and Federal Reserve decisions could reshape the global economy. The trade pact is a reminder of how interconnected economic and political forces have become. Broader challenges remain, demanding ongoing diplomacy and adaptation. The US-China trade pact marks a milestone in efforts to stabilize relations between the world's top economies. By tackling rare earths and tariffs, it offers hope for more cooperation, but leaves big issues unresolved. Technology, aerospace, and geopolitical tensions still loom large. The reactions of other nations and volatile markets show the need for continued negotiation. This agreement sets the stage for future progress, reminding us of the power of dialogue and compromise. The world will be watching as the next chapter in global trade unfolds.